Welcome back, everybody. In this lesson, we are going to learn about something called setting initial conditions. And basically, we're going to be talking about how to rig the game for you. So, the moment you decide to enter the market, you begin to receive biological feedback about your trade. Whether that's adrenaline, maybe you take a trade and you instantly start to go into profit and you get excited. That brings about that elation, that adrenaline feeling. Or maybe you're going to feel a little bit of cortisol, which is a chemical that produces the fear emotion. Maybe you feel that if you enter a trade and instantly it starts to go against you and you start to you start to freak out a little bit. So these chemicals produce those emotions. And emotions are the body's physical and chemical response to outside stimuli, which we discussed earlier. This is why they seem so hard to control, because there's actual chemicals in your body involved with them, and that really will influence you because they'll make you feel a certain way. So during a trade, by definition, your mentality will shift from one of relative neutrality about the market to one of elation or depression to some degree, just as a response to the trading stimulus. Because if your emotions are caused by a stimulus and you add the stimulus of trading into your emotions, to some degree you're going to shift from neutrality to elation or to some form of depression or some form of pain you're going to feel. So the degree to which your emotions are swayed all depends on your initial conditions. And really, your mindset and your technical confirmations and the amount of risk you have on your trade are all going to set up your initial conditions. And this whole course is written to address these things and always give you the best possible initial conditions to be in a trade. So fear and elation will make objectivity impossible. And remember, the whole point of this psychology portion is to help you get to an objective mindset. So the key is to limit the amount that your mindset can swing into fear and into elation. We know it's going to happen at some degree. It could be very small or it could be a huge degree of swing. So if you can turn yourself into an emotionless robot, I would do that. But if you can't, follow along with this lesson and we will teach you how to best accomplish that. So in the short term, you can trade emotionally, but you're going to be in and out of positions, you're always going to be worried, and you're going to be taking small wins and losses. And in the long term, trading on pure emotion is just going to burn you out, and it's going to burn out your account. And you're either going to have a stagnant account or you're going to start losing money. And it's not going to be fun for you, and you're not going to want to do it. So the initial conditions method. What this really is it's just a mindset tool, and it's a reminder of how to be patient and wait for all your confirmations to line up before you take a trade. Because if you understand how important it is to enter the market without fear and greed, you're going to trade a lot better, and you're actually going to have a chance to be a long-term trader because you're not going to get burned out by these emotional swings. It's like an emotional roller coaster. So by setting the initial conditions, we are rigging the game. Think about it like this. If you could enter the trading arena with no emotional stress, or the emotional stress setting was set to low, you would have a vast, great advantage over everyone else. You could win consistently over a long period of time. And if controlling emotions is critical to success, and emotions are chemically created by external stimuli, then the key to trading is to control the stimuli that you expose your mindset to. And it's not often put into those terms when we talk about learning how to trade, but this is what trading boils down to. This is why rules are important. The only thing that you can that you can control in trading are the conditions in which you enter a trade. So let's take an example. Let's say you could set initial conditions in other games. Because remember, trading is a game. For you to win, others must lose. And what's the best way to win a game? I mean, is to rig the game, is to put every single condition in your favor, period. I mean, in most games, this is called cheating, but in trading, it's called being smart and having a good mindset and having poise. So this is what setting initial conditions looks like in other games. Let's say you're playing cards. If you could consistently set initial conditions by stacking the deck, you would never lose. In football, if you could play 11 on 5, your team would never lose a game. In basketball, let's say your rim was 3 times bigger than the other team's. That would be amazing. You would probably win. If you were in a 100-meter dash and you could start at 50 meters, you would have a really good chance of winning that. So these are just a few examples of why setting your initial conditions is so important, because your probability of winning drastically goes up. And this is really something you can use to your advantage, because most people that enter the market, most retail traders, will be entering the market without giving consideration to the psychological effects that that position is going to have on them until after they enter. Because remember, it's only after you enter the market that you start getting that biological response, that biological feedback, that fear, that elation, that greed. So they'll enter the market early, most likely because of FOMO, or they'll cut good trades early because they're afraid to lose money, and over and over and over again. And you will be able to see things in your trading from a different perspective. You'll be able to connect with the market in a deeper way. You'll be able to give the market the proper respect that it deserves and the understanding of the market that you need in order to beat it. You must play with all conditions in your favor. And you will be playing in the trading arena, and your emotional stress level will be set to very low. And everyone else, their emotional stress is going to be very high. Which do you think is going to have the better advantage? Of course, we're stacking the deck, so we have the advantage. And trading is 100% unique in this aspect, because you can set the initial conditions every single time you place a trade. And at times, trading may seem like a hard thing to conquer, but it's unique because you can control those initial conditions. So it's only hard if you're playing in someone else's arena. So why trading is unique is because you're never forced to compete. It's a game, but you never have to compete in it unless every condition is in your favor. So is the setup not there? Well, then don't take it. Is your strategy not met? Not everything is lining up. You don't have to take the trade. Are you maybe feeling overly emotional that day? Don't trade. Are you drunk on vacation? Don't trade. Have you met your weekly goal? Maybe it's Tuesday and you've already met your goal for the week. Don't trade the rest of the week. You don't have to. So when you play other games, eventually you're forced to compete. So like if you play baseball, you would have to hit against all pitchers. Maybe you are a lot better against right-handed or left-handed pitchers, but when game time comes, you have to pitch against whoever's on the mound, whatever their playing style. You have to play against rookies and all-stars and scrubs. Just like basketball, you have to play no matter who's guarding you. And in cards, you can fold a few times, but eventually you have to play. And like in golf, if you hated a golf course, you would still have to play it in order to compete. So these are all situations in which professionals are competing, and the initial conditions of their competition are most likely not in their favor. But you can compete when all initial conditions are in your favor. And this is how we set initial conditions. So the whole point of this is to enter the market with the best mindset possible. And there are two ways to set initial conditions in trading. Number one is enter the market only when all your confirmations are met. Everything in your strategy lines up, and you've seen it before, and you've back tested it, and you know what it looks like. That's when you take the trade. You don't trade when it doesn't look right to you, or when someone else might say, hey, it's a good time to enter a trade. If it doesn't line up with your personal confirmations and your comfort level, then you don't have to take the trade. It's unwise to take that trade, because the initial conditions of the trade you're going to be unsure of. You're not going to know with any amount of certainty if this trade fits within your strategy. And the second way to set initial conditions is to manage your risk properly. Because if you believe in your trading plan and the moves that you take, and you risk only what you're willing to lose on each trade, then there will really be no room in your trading for any sort of psychological distress, because you'll be sure of the strategy and you'll be comfortable, even if it loses, to lose whatever money you put on the table. So if you have a strategy back tested and you know that it works in the long run, and you combine that with the proper risk management, I mean, you have such a better advantage over anyone else in the market. And this is how we set those initial conditions. So over the next few lessons, we're going to teach you how to read the market and find the best probability setups, along with teaching you how to manage your risk. And now that you know about the psychology of trading, the next lessons are dedicating to teach you how the market moves and how to manage your money in a way that alleviates all the psychological pressures that other traders feel and that kills most other traders. So by setting initial conditions, you rig the game. You will never be able to control the price action. So you can only read price action. So you focus on the things that you can control, which is your psychology and your risk management and where you enter the market. If you master these things, they will eventually lead to you becoming an extraordinarily successful trader, and you'll have wealth beyond your imagination. So most people will never accomplish this because they don't realize about initial conditions and how this is a component of trading. And for you, this is your best advantage.